Hey guys, this one is a little bit less of an update and more to do with this particular indicator, right? So I had a message earlier this afternoon, and it was basically saying that there was another guy on YouTube with an indicator charging something like $20 a month for, and this was very similar to the one that we were actually given for free. So what I wanted to do was just to kind of emphasize the fact that this is free. This is available on the TradingView um, TradingView backlink. I'll put a link into the description down below. So this is obviously one of the indicators that I've published, but this particular one, the Fractal tool, I'll just show you basically a couple of ways to use it. And it's actually part of the series that I've been doing recently. So the mechanical ranges, the internal, external breaks on liquidity. So again, I'll put these links in the description below, right, if you want to come and read these. Again, this is all kind of free on TradingView. So look, in the grand scheme of things, all this indicator does, right, is it just identifies the last fractal ranges. And again, part of this is to do with the internal, external liquidity. What you then have is these gaps, right? So what you're looking for is after a decent rally, for example, I'm just going to use this as an example, you're going to see that the prior range was this one. Right, so this is all easy enough to mark out, and easy enough once you get used to spotting these things anyway. And therefore, we had the range break of this high right there. Ultimately, price shoots up, and you can then adjust that range to say 50% from here to here equals this. Right, that's the kind of discount area in terms of price. That's what you're kind of targeting towards, which means you can go down smaller time frames, right? I'll come into that in a second. But the longs and shorts of it is you are actually looking for areas of interest, which is technically this kind of gap area there. We'll go into supply and demand. That's a different type of video again. That's a different part of the strategy. But in essence, just using this particular free indicator, how you'd use it is like we've created the range. We understand what we've done. We're in an uptrend. We've actually got a break of this high. This forms the current range. The current fractal lows are here. The current fractal highs are there. And then ultimately the gaps that we're likely to want to pull back towards are probably under the 50%, right? Now, there's nothing stopping us, hitting this and kind of rallying on up. But in the grand scheme of things, when you're in a discount range coupled with the gaps after a decent rally, you are expecting a pullback. And therefore, it's pretty simplistic, right? This is just, again, part of the mechanical structures, the mechanical sequence, how you can use this to your advantage is like this, right? So if I was to drop down to a smaller time frame, get my pen off, then all I'm looking for is the fact that we want to go under the 50%. We just delete this one. We want to go under the 50% marker of the, like I said, the discount range. We are looking for areas of liquidity. Well, clearly there's going to be liquidity underneath these. We can clearly see that we're in some form of downtrend, right? We haven't actually had anything in terms of a large supply drop yet because there was nothing really impulsive to the downside. So long story short is, we are looking for liquidity in and around this area, right, into that discount zone, using the indicator to potentially take smaller time frame entries. Anytime we're going to break the range, what you expect to happen is break of a range, retest into the range, back down, right? So with that being said, like I said, the indicator is free. Link is down in the description below. If you want to read a little bit more context in terms of how to use this, how to apply this, then obviously there's a couple of posts here as well. And therefore, I'm going to keep this video very short, very sweet. Any questions, ping them across on Discord, and I'll see you in the next video. Thanks for watching, guys.